So what about the old adage here, John, that you sell in May and go away? Is that happening this year?
Well, for the last couple of weeks, a couple of days at least, that old adage seemed to be holding. But today we had a slight break in that particular pattern, and I think that we will probably continue to rebound because of some positive news as far as the interest rate outlook in the U.S. is concerned. I think as the Fed minutes are digested, people will be increasingly reassured that there is plenty of liquidity to support markets.
Okay, and people seem to be reassured that the U.S. economy is strong enough to withstand maybe higher interest rates in the future.
Well, the U.S. economy is strong enough, but I don't think we are going to have higher interest rates anytime in the near future. And that was the message from the Fed today, that there will be neither passive tightening nor active tightening, meaning that they will reinvest their principal so that the balance sheet will be steady, and then interest rates increases are not on the cards for at least another 6 to 8 months. So rates are low, and the economy is going to rebound in the second quarter.
Okay, well, John, you know, at the start of this year when we last spoke, you were predicting 15% gains, I think, for the U.S. markets. We're at maybe 7% so far in the middle of May. Still got a long ways to go.
Yes.
Are we still going to get there?
Yes, I think so, because actually in early May we were close to 1370, which means that that was just another 6 or 7%. So I think that getting another 7 or 8% from here on is quite possible, especially with U.S. growth rebounding in the second quarter and U.S. interest rates continuing to remain low, liquidity being plentiful, and even in the case of, and then we will also probably see a good rebound in Japan in the second half. The number you will see today is going to be very weak, but and maybe the second quarter will be weak, but after that we should see a strong rebound in Japan, which should help many of the U.S. companies that do infrastructure and materials and things of that kind.
Okay, now it's interesting that you're expecting maybe an 8% pop in stocks for the second half to get to that 15% mark that you predicted earlier this year. But the main drag on the markets have been commodities. You know, lots of volatile trade in oil, in gold, in copper, silver. If there's so much liquidity around, why isn't that going into commodities stock, commodity prices? In fact, we've seen a big decline.
Well, there are several factors. One of them being that there were some changes in some of the margin requirements and all of that, and then that had some impact of on the market. And secondly, there were some unfounded fears, I think, that China and some of the emerging markets were going to slow more than that they would have a hard landing, and then the U.S. Q1 disappointment also didn't help. But we should see that the U.S. Q2 will rebound, and then we should see a Japan rebound also in the second half. All of that should provide a boost to commodities.
All right, John, we're expecting those GDP numbers out of Japan, but quickly, I'm going to give you 20 seconds here before we get to breaking news. You're still holding your prediction for 20% stock gains for the emerging world?
Well, I think that maybe we will not get 20%, maybe more like about 15%, because they dug themselves into a very deep hole during the first few months of the year. So getting out of that hole into and getting a 20% may be a little tad difficult. So maybe more like around 15 to 17% gains is what we should have, especially in the second half.
Okay, double digits, still not bad, right, John? Okay, stick around. We're going to get to those first quarter GDP numbers now in Japan. They're crossing the wires. Mike, how do they look?
They look really horrible, actually. Minus 3.9% is the annualized figure for the first quarter GDP. The consensus forecast was a drop of 1.9%, so you can see way out on the downside with that. We had a drop of 1.3% the previous quarter, so this is 2 straight quarters of contraction. Also, for the quarter-on-quarter, we had a drop of 0.9%. The forecast was 0.5%. The previous quarter revised down a little bit lower than it was originally, 0.3, now down to 0.8. The GDP deflator now, this is a very broad measure of price moves, and it has been showing that Japan continues to be in deflation. That was a drop of 1.9%, slightly worse than forecast and a bit worse than the previous quarter, suggesting that prices will continue to fall here in Japan. Now, we are looking at another quarter of contraction going forward. 3.3% is the forecast, although obviously in the light of this figure, 3.7% drop in the first quarter, economists may push that back even lower. The reason being the March 11th earthquake, the tsunami, which devastated northeastern Japan. You know, we've got 25,000 people dead or missing, $300 billion of estimated damage, huge disruption to manufacturing because of part shortages, transportation disruption, exports plunging, March output falling by a record. The picture going forward not looking great. As I say, a forecast of a drop of 3.3% for this quarter. But the government says with its additional budgets, it's had one supplementary budget, it wants to push through another, that it can get out of these problems and this contraction by the end of the year. Take a quick look at the yen. We were trading at a one-week low against the euro ahead of these figures. We have seen another drop of about a tenth of 1%, 116.49 against the euro. A little bit of a downtick against the dollar, 81.71. Susan, back to you.
All right, Mike, thanks for that. So way worse figures from Japan Q1 numbers than expected, a drop of 3.7%. John, this doesn't look good for the Japanese economy.
No, but this is what was likely to have happened, and we will probably see another big decline in the second quarter, maybe 4 or 5%, but after that you will get a very, very sharp rebound. And actually what might even happen is that the second quarter may not be as bad because you know, we are already beginning to see that some of the decline was more front-loaded into March and April, so that by May and June we should begin to see some improvement. So by the second half, by the third quarter, you should probably get a good bounce. You know, they say the harder the fall, the sharper the rise, and that might be very valid in the case of Japan. Yes.
Okay, but John, what makes you so sure that we're going to see such a sharp rebound in the second half? We still have factories stall, you know, production being hampered. You know, what are you looking at, especially when the yen is still trading at these strong levels?
Well, what you are going to get is that the whole reconstruction is going to be financed out of public spending, out of Bank of Japan stimulus, additional stimulus, and also remember that Japan is a very, very rich country, so Japanese companies have a lot of money that they can put to work for reconstruction. So a lot of reconstruction spending should begin to kick in, and also
John,
private consumption should kick in.
Before I let you go, let me ask you, what's going to be the effect on the stock markets? How are Japan equity markets going to do this year?
We will probably, in the second half, the Japanese equity market will rebound very, very sharply, and we should go back. We should have, among the developed markets between the US, Europe, and Japan, Japan will probably be the best performing market in the second half, not right now.
Okay, John, thank you for your time.